All right. It says we're live. If you guys have been having an awesome discussion with some of the folks in the group, I got a thumbs up. I'm not sure if that was for me or for the answers that I was given. Doing some pre-party stock discussion with the group, man. I like when you guys kick in here a little bit early. It's kind of fun. Have some moves of the week discussion, what you guys are doing, what you're thinking. That's the whole point. Striking up a dialogue anyway. But if you do have time, hit me up and give me a thumbs up in the community. Let me know that I'm coming through somewhat loud and clear here from Virginia Beach. For you guys that are just making your way into the Friday live stream, this is a normal thing that we do on the Independent Investor channel every Friday, 9 o'clock Eastern time. I've got some topics on the board here. And if there are any on the board that you are curious about, these are some of the things that I've picked up over the course of this week that I'd like to talk about in no certain order. So if there's something that you guys see there that perks your curiosity, I can definitely address that during this live stream. Obviously, a lot to talk about. Stock market's delivering a lot of unique conversation, a lot of confusion. If it were easy, everybody would do it. I actually think that the stock market is significantly easier than people give credit for. Furthermore, I believe that a lot of people have what it takes to succeed in the stock market. Our job on the Independent Investor channel is to sow that potential. Maybe push a button here and there. Maybe uncover some of that potential that you don't think you have, and to uncover it a little bit earlier on. That way you can get started in the stock market maybe a little bit earlier. You know, if you guys are looking at the board, my number one thing here is the starting portfolio. I believe that you can start with $100, work up a starting portfolio, no matter what your tolerance, no matter what your experience is in the market, by just investing in the VTI and the BND. Those are your two ticker symbols. VTI is the Vanguard's total stock market index. It's one that I own personally. And then BND is the total bond market. So you can check those out for yourselves. Expense ratio on the VTI 0.03% every year. So very, very low, and BND is just a hair above that at 0.035. So I also own BND. The bond portfolio through the Vanguard ETFs has been increased this week. That's another video that's ready to go. All I have to do is hit the fire away button through YouTube. So please keep your eyes open for that. It's a good one. I was very happy with how that turned out, but you guys that come into the live stream know that I typically give a little bit of forecast to what to expect from the channel. I've got some really, really cool folks in the group here tonight. I just want to, first and foremost, I will call out, I see Noella, who has popped in the group, one of our savvy businesswomen from Canada. It's great to see you. I always enjoy you popping in here, and I know you don't come in every Friday, nor would I expect you to. I just don't think I'm that. I don't think I'm that entertaining, and this is not Game of Thrones here. So, but it's really cool to see you guys and have you come in and at least support the message for a little bit. I saw Ryan Scribner pop into one of my videos this week that I posted, and he left a little note. So I invited him to the live stream. We'll see if he pops in. But I do have one of the channel creators who I don't think would ever miss a live stream, to be honest with you. I feel like he's my brother, to be honest with you. He's my brother from another mother. And that's Brent with the Financial Investor, certainly. So help strike up a conversation, offering perspective. We've been kicking around some ideas a little bit, talking with K97 about the prospects of proper diversification in the portfolios. Very, very interesting conversation. It's taken me quite a long time to understand diversification, proper diversification, certainly, but Yeah, he's laughing. He's like, oh yeah, I get my weekly shout out, but he is my brother for sure. He's been supporting me for a long time. But I just saw Chris Invest, who's another another channel creator, and I do apologize. I think you had left a comment on one of my videos, and I didn't have a chance to kick over and check out your content to wish you all the best. But for taking the time to come in here, I'd like everybody to kind of welcome Chris Invests. And obviously there'll be about 1,000 people that review this live stream after I post live. And definitely, I've never seen your content, but if you're serious about providing awareness to individuals looking to get involved in the stock market, I'm all about it. So I want to welcome you as well. Good luck to you and your endeavors and your project. I typically would offer a little bit of advice as far as utilizing YouTube in a manner that is helpful to others. Okay, and if you approach it that way, it typically is a lot easier to embrace your project and not get discouraged, because the discourage really is going to set in from time to time. You're going to feel like throwing in the towel. I've since got way over that. The independent investor channel's really been one of those things that I've embraced. There's been a lot of things that have happened along the way where people have come in and kind of said, hey, listen, Ryan, I'm actually seeing some really amazing results. I started with zero. I'm now approaching my first $10,000 goal, like you talked about. Those things mean the world to me. They really do. I know that they're possible, but in the end, watching a YouTube channel is not going to just automatically bestow success upon you. All right, there's going to have to be some level of meeting the creator 50-50, and I think this channel really does offer. And I try to define that road map as clearly as I can for you. Talk about some of the common pitfalls, not only common, but some of the pitfalls that I've struggled with and worked through, and hopefully we can avoid some of those for you guys as well. I've got Jose in the group here. He says hi, or yeah, so hi. That's awesome. Thank you for coming in and taking some time. Ryan, can you talk about your approach to FOMO? Please define FOMO for me, please. It's been a long week, and then I will address that. Christopher Blaine, who's been coming in, making a lot of appearances for these Friday live stream. Hopefully the wiser for it. It's great to strike up a discussion about what's going on in the market now. Lost another % in the S&P 500 this week. Obviously been in a downtrending market a little bit. My flight to safety video is going to chronicle how I've actually purchased a little bit more bond exposure. Finally was able to kind of justify entering a block into each of the Roth IRAs with both the IV, which is an intermediate bond fund, and also my favorite, which is the Indy. In my wife's portfolio, had some cash on the side. Really didn't want that stale cash sitting there on the side, so went ahead and bought a couple nice $10,000 blocks in each of those accounts to really try to solidify some safety and counterweight within the Roth IRAs. I'm fairly happy with the rest of the positions. No need really to get crazy. I talk about that a little bit as well on the video. Some of the things that I will recommend. The video that I released this week about some of the strategic tools. Hopefully you guys did enjoy that video. That was a kind of a cool video, just showing you some of the very simple techniques that I use. It's not rocket science, Don't buy a stock expecting that it's going to go up every time. Take advantage of a potential downturn. So one of the things that I haven't done yet that I will promise to the community this evening is chronicling my Firstrade portfolio. It's went up over 4,000. It's sitting at around $4,200 right now. So approaching that mark, that milestone that I have set in the portfolio. We started that account on January 2nd of 2019. So 5 months ago, we started that, and we're progressing nicely toward our goal of not only exploring the Firstrade platform. You guys, if you're with Firstrade, you guys are enjoying the updated application, which is actually quite impressive. They did a good job updating a lot of the aesthetics, but also some of the functionality. Really track history of your portfolio. It's aesthetically laid out a little bit nicer. So I'm happy with that, but we are tracking the Firstrade account. But for you guys that are kind of joining the group for the first time, I want you to kind of run an aggressive portfolio test. And I say aggressive portfolio. I really did a lot of research before I built those names out in Firstrade. If you guys are interested in those stock picks, I can rattle those off to you very simple in the group, so you guys can just give me a thumbs up. That's no big deal. But I'm actually off about 6.75% in that account. And I want you guys to kind of ask yourself, if you were invested and you were able to build that account up with the market and its condition, only to be down close to 7%, is that something that you could stomach? How would you handle it? Would you look to earmark certain positions in the account to add to them? Okay. I was a little discouraged. I looked at it objectively. Halliburton has just been an absolute dog in the portfolio. Nokia is really not that far behind. Entered into those stocks at some ill-timed entry, and those types of things are going to happen. They are. And when they do happen, the last thing you want to do is look at your portfolio when it's kind of down like that a little bit and say, what am I doing? Good grief, you come to some realization or something that you were watching some YouTube channel and you decided to have this crazy idea of investing in the stock market on your own. And that's the last thing that you want to do. And I could just as easily come on and profess that I'm building the account quickly and with ease, but there's nothing easy in the stock market. There really isn't. And becoming an investor and waiting it out, being patient, paying your dues, taking your licks, making your mistakes. I will say this, with the positions that I bought in Firstrade, which I will go ahead and give you guys now, if you'd like, some pretty good picks in there. As a matter of fact, I've already got them pulled up. Yeah, I do. So Allegheny Tech, ATI, Fortis, FTS, Halliburton, HBAN, which I believe is a regional bank, as well as Key Bank, Kinder Morgan, Manulife Financial, which is MFC, MRO, which is a favorite of mine, Marathon Oil, Nokia, ticker symbol NOK, Oran, which is a French telecom company, Regions Financial, Sanofi, and then I own 6 shares of VB, which is the Vanguard small cap ETF there. So I figured I would start to draw a nice base. That is the largest position in the portfolio. That's only down $7. And that's really the only true diversified asset within the portfolio. The rest of them are all single stock. So down about $285 in that account over the last 5 months. That's just where we are. Not overly impressive, but what we're going to do is we're going to continue to monitor, work, fund the account. All those stocks are set up for dividend reinvestment. Some really, really good dividend payers. So if you guys missed some of those ticker symbols, I would gladly provide those to you again. And send those through the group so you guys can take those names and know what exactly my Firstrade account looks like and how we're looking to grow that account over time. So for you guys that are new to the live stream, I really just want to welcome you. I'm so glad that everybody's made their way into the group. Matt Paley's in the group who says listening. That's great. That's great. I'm listening too. I'm listening to everything that I'm saying back here. So, but it's great to have you guys. About 10,000 more of Tesla at 250. It's undervalued. 225. It's undervalued. 200. It's undervalued. 190. It's undervalued. I'm down over 7,000 in Tesla, but let me tell you why it's okay. I think you guys are probably talking to something that I would like to be involved with here, but I'll go up and try to catch the rest of the thread there for Tesla. I hate to tell you, but I told you. You know, funny enough, right here at these levels, in the right portfolio, you could probably take a little stab at Tesla, to be honest with you. I just think looking at it strictly as an auto company is ill-advised if you're interested in investing in Tesla. I'm not totally against investing in Tesla, but do it for the right reasons. Okay, do it because they're on the cutting edge of electric driven cars. Do it because of the battery technology. Do it because it's a technology company, not necessarily an automaker. Do it because of the data. Really, the data that they're gathering is putting them over and above a ton of different other companies, and they're giving them a hell of a head start. All that data is going to go into autonomous driving. So kind of exciting, to be honest with you. And I don't mean to be coming on here and changing my tune in Tesla. I will tell you, I probably will not be investing 1 red cent in the company, but at 190, good grief, 10 shares, a $1,900 position, maybe cut it in half, a 5-share position, less than $1,000 to take an aggressive position in a company like Tesla. I don't know. Again, in the right portfolio, it could work. The last thing I want to see, and that's why I don't spend a lot of time talking about those high growth names, is that most people aren't in that position. Most people need to be looking to justify the starting portfolio, which is here. The starting portfolio can exist with VTI. Spread your money out across 3,700 different offerings and then put a little bond exposure in there. Guys, that's a perfect portfolio. Adjust your risk over 100%. If you want to go, 50-50, if you're 50 years old, go ahead and do it. If you're listening to me and you're 21 years old and you're like, wow, I like the idea of a perfect portfolio, I'm going to buy VTI and I'm not going to buy any bond exposure, right? That you would be justified in doing so because you would be young enough to justify not carrying any bond exposure or do a 90-10, right? And if you guys are confused at what I'm talking about, that 90-10 split or the 50-50 split or the 75-25, whatever it is, what I mean is if you do 75% VTI and 25% BND, which is the bond ETF through Vanguard, that's your ability to kind of adjust your risk tolerance within the portfolio. So the more stock that you have, the more tolerance you should have to the market. The less stock holding you have, the less tolerant you should be to the market, okay? And you can just very easily adjust your percentage in your portfolio. It doesn't take a rocket science. As a matter of fact, you don't need any experience at all. I've just explained it to you. It's very, very simple between those two assets. All right. I'm down 3,000 in VDE. When will oil go up? Wow. That's a pretty significant position, $3,000. I as well, I don't think I own VDE. I think that was the only sector spider ETF that I skipped over because I do have some larger positions in Royal Dutch Shell, in Marathon Petroleum, which I'm just as excited to own here as I was at $70. I'm a little bit confused as to why it continues to go down. Now, energy and fossil fuel companies are really taking a beating. Chevron is another large holding of mine, but we're going to wait it out. I'm going to continue to win the dividend, and hopefully this thing has kind of bottomed out a little bit at 50 with MPC, but I think we're fine. I knew that it was going to be a longer term position, but just another example of a company that I did hours of research on and thought I had that absolutely pegged. It's still making a ton of money, trading below 10 times forward earnings. MPC is a great pickup here at $50 a share. With a 4% dividend, perhaps, guys, correct me, maybe 4.5 on MPC. So I owned enough single stock to justify not buying the energy. but I would question, and I don't want to beat around the bush here with your $3,000 of loss. Okay, I think your allocation to energy was pretty heavy. Now, if you have some other holdings in the portfolio to help kind of buffer in that $3,000, or this, it's a relatively small position in the portfolio, then okay, obviously wait it out. You're invested, you're diversified across the entire energy sector. But unfortunately, I wish I could tell you that here it's a bottom and it's going to swing back up. I don't think that to be the case. I think energy's in some real trouble right here. I do. And that's just the sense. You guys don't tune into the Independent Investor channel, especially come on the live stream and have me blow smoke at the screen, and let you know things that I don't believe to be true. And I think energy's in trouble here. I do. And I'm overweight. I'm overweight energy. I could probably pull up my allocation, and I know I'm overweight in energy a touch. But at the same time, my total overall exposure to the portfolio, I'll give it to you right now. Just give me a sec. I know I'm overweight, but it's not in relative to the total overall portfolio. It's really not that bad. But you just hold the shares. I mean, you're good to do that. Just give me a sec here. I'll log in and I'll give you this percentage. Okay, I'm kicking into Merrill Edge right now, guys. Just give me a second. Taking a little longer to log in. I'll let that work for me, and then I'll kick over. But yeah, 3,000 down. That's interesting. Most of my sector spider ETFs that I've got smaller positions, man, like 10 shares. You know, we're talking $1,200, $1,000 up to my largest position is held in healthcare. And I went a little more heavy in the healthcare because I felt like it was getting unduly beat up, and I was right. So I have energy of 7%. That's about right. I've got Jeff Koski who chimes in a bit, says 7%. That's about right. I'm going to give you the exact number here after I kick over to this. I use the portfolio allocator tool all the time in Merrill Edge. It is just a freaking awesome tool. It is so awesome. You guys might be interested to know what my actual allocation is. It'd be kind of cool if I could actually, you know, I don't know, what is it called when you guys can actually see what I'm doing online? You guys can tell I'm old. I don't know any of this social media stuff. But here we go, view by sector, and I can kick down here to energy. Yeah, so I'm at 6.84%. My recommended allocation right now with my target allocation is less than 4%. So, you know, 3%. Wow, that or 3,000. That's a lot. You might be a little bit heavier levered to oil than I would like to see. But at this juncture, you might want to just kind of wait this thing out and let oil do its thing. If it goes to the mid 50s, so be it. Let it come back, let it work on you. But I typically don't like to be so heavily levered to certain sectors, materials, energy. Utilities is a pretty good one because utilities is a nice buffer with the dividend yield. But the sectors that I like to be a little bit heavier on are healthcare, technology. I do like industrials, but it's not critical that you're over levered in it. I do like real estate, but certainly that's one of the lesser of the portfolios. And then, of course, your staples and your discretionary. But yeah, 3,000, that's tough. That's a tough position, especially in energy. I would say that if you're 3,000 down right now in healthcare, I think I'd be a little bit more satisfied with that. So K97 says that J&J just lost another lawsuit at that company. Let's see if it finally has a pullback. Good luck on that. That's a tough one to get. The only pullback that I've seen that's been worthwhile in healthcare has been in Pfizer. And if you guys listened to what I was saying, at least you would have heard me say, take a look at Pfizer sub 40. It didn't stay there very long. But I plussed up my position in Pfizer, and it's looking like it's going to be a pretty good move. I did end up plussing up my position as well in Medtronic, so very happy about that. It's just really kind of been an underperformer in the portfolio. These things come back in a fury. And if you believe in the company and you believe in what you're looking at, which I did, Medtronic in the surgical robotics sector of healthcare, very, very exciting stuff. Accelerated revenues, just an awesome company. So I did plus up, hold a fairly large position in Medtronic right now in the mid 90s. I think this is going north of 100. Certainly, that's just a kind of an easy call here, unless it gets drugged down with it from the broader market. I keep buying into my risk slice in M1. Boeing, Intel, Nokia, Tesla, Raytheon, a few out of those I like, and NVIDIA being one of my favorites that you have there in the list that I do not own. I will say that. I do own Boeing, Intel, Nokia, and Raytheon. I again, don't own Tesla. Good on you for having the fortitude to buy the stock. I just think it's extremely risky. All good comps, and all down 13 to 20%. I'm long in all. I think you'll be okay. You've got industrial, you've got technology, you've got telecommunications. Tesla, I personally don't put it in autos industrial. I put it into technology, quite frankly. And then Raytheon, of course, industrial, the defense subsector of industrials. Phenomenal company. So, you know, there are some gaps if we're playing Am I Diversified? We had this discussion before the live stream tonight. Certainly you could look at that and add a healthcare, which you don't have right now. You could definitely add a healthcare and maybe a utility, certainly always trying to strive toward that broader sector exposure. It's difficult to do. And I got asked the question, and I'll answer it. What is true diversification? And I'm going to give you my opinion. You can agree or disagree with me. I know I've already answered this to K97 directly, who's came in and hit me with the question before the live stream. But can you be diversified with single stock? And in my humble opinion and in my experience, the answer is no, you can't. You have to understand, guys, that even in the S&P 500 with the 510 companies that are represented in the S&P 500, you're always getting that upper echelon of representative in the large cap U.S. stock market. What you're not seeing is the 20 to 30 companies that adjust in and out of the S&P 500. If a company falls off the radar, you know, they'll supplement a new representative into the S&P 500, and you don't see that impact at all because you're not diversified. You are diversified if you own that. But if you do just own single stock and you have 10 good ones and you just so happen to pick the few lemons, you guys that have followed me know that I'm not exempt from this. Kraft Heinz Food, General Electric, these are some lemons, right? China Mobile for a short time. You know, some of these are really, really hard to avoid, even some of the high flyers. I mean, look at Google, just went through a fairly disappointing quarter. Facebook with the privacy issues. There's no stock out there, unless you're Amazon, I guess, that is exempt from a downturn in the market, and it can be pretty costly. I'm going through a pretty good swoon here with AT&T. Looks like AT&T. The chart support on AT&T is very, very good. So if you guys are looking at telecom right here, I would at least take a good look at AT&T here in the low 30s with that fat dividend. Fat. I mean, good grief, a guaranteed 6.5% on AT&T. That's good stuff. Park it in a self-directed account and live to fight another day, man. That's their AT&T is making money hand over fist. Time Warner now part of the program, and when everything comes together with 5G, with AT&T, it's going to be a powerhouse. All right, and I'd like to see this stock well north of 40 here shortly, and in the sub 30s. I may be reminding you guys, say, hey, remember when I was talking about AT&T? Did you take a look? And I've got over 100 shares of AT&T. So I've owned it for quite a while, but I've taken it into some deep water here. I've owned it. I think my entry price was probably around $36, $37 a share. So I've kind of been in the red here for quite some time, but it's looking like, I mean, my pain can be your gain, quite frankly, because, you know, if you're picking it up here, you might be, I know you're getting a better entry point than me. Where it goes from here, it's looking like it's formed quite a significant base. So really good stuff. I'm going to try to cruise up here and try to mix this so I can get some of these really, really good. Ryan, you need a Yeti cup for your whiskey. Yeah, I know. I'm using a frosted glass, actually. But I did get a Yeti. I did get a Yeti holder for the beer cans for the beach. So I may test that out tomorrow. I take that opportunity, just sitting on the beach drinking a beer, actually. That just reminds me to wish everybody a happy Memorial Day weekend. I want everybody to be safe, certainly. And just thank everyone for their service. That's one of the statistics that I have up here on the board is the 49% number one fear amongst all military members. And if there's any military members in the group or that you know some folks out there, the number one fear that they have is financial instability. Amazing. Couldn't believe it. I can tell you as a military member, I have a very unique perspective since I got into the military, even as a non-rate, how humbled I was to get a consistent paycheck every 2 weeks, man. I was so happy. And I've never lost that. I've never lost it because of my individual perspective. I went for a long, long time by having sporadic paychecks. You know, I've went a long, long time without having those injections of cash, but thought I would definitely mention, I know I've got Jeff Koski in the group here. So man, I'm with you. I'm with you. I really am, man. My heart's with you. And I thought I'd take just a moment to call that out. I don't know how I went from whiskey to military, but what the hell, man. This is my live stream. I can do whatever I want. But wishing everybody all the best. And yes, I do need a Yeti for anybody who's looking for some good gift ideas for me for my apple juice. So definitely cold apple juice is better than warm. So thank you for calling me out on that. I really appreciate you guys doing that. So anyway, U.S. Navy vet here, man. Good stuff. Welcome to Virginia Beach. I want to read that. Welcome to Virginia Beach. Daniel Martinez just tipped me $2. So that's a few bucks, man, toward that Yeti. If you guys saw those Yeti coolers, my goodness, man, we should be buying some stock in some Yeti. No doubt about it. $175 for a beach cooler. That's insane. Okay. Even a financially steward like myself is not going to pay $175 unless somebody in the group can say, Ryan, it's totally worth it, man. But I've got Sean Langan as well, who just hit me up here at the bottom of the community, man. This is active duty Marine here. Too many young guys don't know the power of investing. If knowing the power of investing is kind of a difficult lesson unless you just, somebody's got to set a spark in you, okay? And the power of compounding interest can get somebody excited about it. Unfortunately, you don't see the benefit of compounding interest unless you have the ability to look at it and forecast being there in the future. That's the tough part. So what does that mean in the short term? Okay, it doesn't do anybody any good to look at the power of compounding interest only to get involved in the stock market and not understand why they're doing it in the short and medium term. Okay, I can sell you on the long-term benefit, etc. Somebody can look at it and say, wow, I can have that when I retire. But I think the real deficiency, Sean, and I'm addressing Sean's comment here in the group, is just general awareness, straight up. The military does a pretty good job of offering the debt consolidation course through Ramsey, and that stuff works. It really does. It works for a lot of people. I know it does. They take the statistics at the beginning of the course, and then they take the same statistics. And usually there's couples in there that are looking to reduce debt. So on that side of the house, the awareness really does help. But man, I don't know what it is. Okay, as a military member, I'm putting food on the table. Okay, I'm not rich, okay? I am in my head. So I'm a tough specimen to compare somebody who's struggling with this number one fear. A lot of folks say that they'd rather go to war than deal with their fear of financial instability. And really, really unfortunate. I wish I could talk a little bit more. I try to kind of separate the topics on the Independent Investor channel, just for obvious conflict of interest reasons. But my heart goes out, certainly, and always welcome to have those discussions behind closed doors. I'm also welcome to have the discussions right here as well. I just try not to get too specific about my own personal military life. I mean, you guys know that that's my profession. YouTube is not a profession. It's a side hustle. And that's another thing that came out of this statistic, is that a lot of military members are resorting to kind of side hustle type of activity to supplement their income. Now we're talking, now you're thinking, okay? You're not just complaining about it and worrying about it, you're doing something about it. And that's another thing to your point about, at least getting involved in the TSP. And if you knew nothing about investing, man, make it easier on yourself and set that life cycle fund to autopilot. That's one of the lowest cost, if not the lowest cost, managed employer sponsored kind of retirement plan. And if you did only that, you would benefit from it. But I do agree with you. It's amazing. And even the folks that we do talk into getting involved in the TSP, they never log into their account. 50% of people are so disinterested in knowing what they have that they can't even log into the account. They spend their entire career with all their money invested in short-term bond exposure. And so, it's a double-edged sword. I think people need to be willing to help themselves, and hopefully I can offer a unique spark. I mean, I'm not going to save everybody, but I can motivate a lot of people, no doubt about it. And hopefully they get that. I don't mean to sound arrogant or pompous, but I do believe that I can motivate somebody to maybe spark a little awareness and say, God, maybe I should be a little bit more savvy on this stuff, pay a little bit more attention, man. Where could I be if I paid a little more attention to this and started to get into the habit? And it really is. It's habit forming. Okay, I'm not saying that you need to have the level of devotion that I have, because I love investing. I love the way that I feel doing something that is supporting my financial future. And those are the intangibles that you end up falling in love with. Okay, it's not the little dab of profit that you take. It's not those little things. It's not. It's just knowing that you're doing everything within your power to support your financial future. And you guys know too, it's really not about me. I support a family. I could care less about myself. I do it, and that's really the benefit that I get from it, is being able to say with good faith that I do everything that I can possibly do to support their health and well-being down the road, and make me that much more fit to deal with unexpected expenditures down the road. I'm doing everything I can do, and if I can't do any more, then so be it. I'm good with it, right? That's a really, really good comment. Getting some lag on my end, on your end. I hope you're not. I've been watching these replays and they've been coming through, Greg. I do apologize for that. Work company 401k is switching to Fidelity. Not sure how that will go. Fidelity's really good. They offer an awesome program, but I tell you, the 401ks that I've reviewed are all over the freaking map. Some are very expensive, some offer matching, some don't, some are so confusing. You have no idea what you're invested in. Some of the expense on some of the index funds that they offer are super high. Some are really, really low. So you have to really fish through there and piece together some level of a respectable portfolio to try to keep the fee, at least the expense ratio, because they're going to get you on the fee side of the house. 401ks are expensive. I'm not a big fan. I'm okay with you guys doing 401ks But there are a lot of really, really good ones. And then in my opinion, there's a lot of kind of bad ones. So if you are holding a bad one, it's not my advice to just completely give up on it. My advice is to fund it to a level that you're happy with, building a nice base in, and then take the rest of your surplus cash and start a self-directed individual retirement account with those dollars. I think you'll be so much better off in doing so. All right. SWTR, I believe that's Schwab's S&P 500. If I'm not correct, I think you put SWTR with a $sign. That's pretty cool. I appreciate that, man. That's one of my favorites as well. Just another great offering. I think that's a 0.03 expense on that as well. But anyway, company matches there. That's good. If the company matches there, that's always something that I advocate for. That's free money. So even if it's going into a little higher expense 401k, you'll be good to go there. So you guys are switching the ticker symbols up. I'm pretty sure if the ticker symbol is WTR, I don't know what that is, but I thought SWTR was the Schwab's S&P 500. Maybe not. It's not one that I've ever owned. Medtronic acquired Titan Spine. That's awesome. It's just a space that I wanted exposure to, and I had a discussion at the top of the live stream. Maybe it's SPX. There it is. I've got the ticker symbol right there from Jeff Koski. Appreciate that. Yeah, the surgical device space is just one that I wanted to be part of. And then the lithium batteries, that actually got brought up in the top here. And I mean, if you want exposure to some of that technology, I hate to mention Tesla, but I don't know, the further it goes down, the more interesting it's going to become, I guess. Whether or not I pull the trigger or not will be your ultimate barometer to whether or not the stock is investable or not. I mean, there's just a lot of other stuff I'd rather invest in. I did take a small position for you guys, not to rant about uninteresting stuff. I've got Ruth in the group here. What are your thoughts on funds through USAA? I will comment on that certainly, because you are going to absolutely appreciate or not appreciate my opinion, but I will give it to you honest. That's the way I always do. I'll give you some of my insights on USAA, certainly, Ruth, but give me one moment. I did pick up 10 shares of Walmart this week as well. I did put in a nice buy order today, actually, about 1.5 minutes before the market opened, just so I could avoid the after hours garbage. I bought 20 shares of a small company called Apple Computers. So I added to my existing share position. I reduced that share position when it was north of 200 down to around 11 shares, 11 and change with the partials, and then added 20 shares back into it today. So you guys can track that as well. Not really trying to pick a bottom in Apple. It's given me an entry. And in my experience with Apple, the stock doesn't really present these opportunities very often. Obviously, getting an entry, doing that strategic buying, and just felt like I had a good entry there. So that's where we're rocking it out. So financial investor, awesome. Just let me know. You guys are talking amongst yourselves. But Ruth hit me up with an interesting question. I think USAA, I'm not a big fan. Okay. I think as a brokerage, I think they're very, very second tier, and that's given them a big compliment, because I don't think they're that good. All right. Very, very specific. And they don't understand, seemingly, that us military folks, we talk. Okay. We talk. We're not quite as tight knit as fishermen, but we're pretty tight knit. And I'm very, very vocal with my displeasure on USAA. I've told them directly that if they wanted to win my business back, that they would have to win it back on merit and provide me the bottom line. And for a lot of people, the bottom line is the dollars. I said that if USAA could actually provide a service to me that was a 10% over any premium for any competitors, that I would go with USAA any day of the week. Because I will say this, dealing with USAA from a customer service perspective, anybody who's ever dealt with them will echo exactly what I'm about to say. And they are the absolute best in customer service, minus a few anomalies. I've heard a few interesting conversations. But on the insurance side, if you ended up needing to file a claim, they would be very, very good to deal with. From that perspective, okay. All right. From a brokerage perspective, I've heard some horror stories of trying to get accounts designated as self-directed, and then they want to hang up the phone on you and say that they can't further the conversation any further. And these are the very people that they are professing to be all about. Okay, these are military members on the other end of this line, and you don't have to be rude. Okay, you don't have to explain to somebody that because they want to self-direct their account and change the designation, that somehow you need to get all fancy with them and tell them over the phone that you have to end this conversation and that they can't further provide you any information, that they have to terminate the conversation. These are real testimonials that have come back to me. Furthermore, if you end up calling USAA and trying to get a good mutual fund bought for yourself, whatever, they're gonna sell you on their high cost stuff. And I've seen cost mutual funds from USAA way in excess of 150 basis points. Okay, I know this because I have people ask me all the time, Ryan, I'm with USAA, can you check this? Sure, pull up your account. Boom, I show them right there. I turn their phone around and I say, you see this expense ratio of 1.67%? They're murdering you. 1% is just incredibly too much. And I can guarantee that financial planner, made a big kickback when they sold that product to somebody who probably needed a little bit better guidance than just selling them a high growth mutual fund because the planner wanted a kickback on that particular product. I don't think they're that good. I really don't. I don't like their mutual fund products. I would much rather see you look at a Vanguard product. Vanguard is just structured a whole lot different. USAA is a for-profit company. I'm sorry. Vanguard is owned by the investor. It's just a lot different philosophy, and that's how they can offer that. And Sean's saying high expense ratios. That's exactly correct. And if you don't believe me, check it right now. I mean, you can listen to me, and watch your favorite sitcom on TV, but log into your USAA account and check it for yourself. I'm right. That's my spiel on USAA. I thought I'd spend about 5 minutes on that answer because it's really worth you guys hearing me out on my perspective. And on the insurance side, I've tried 3 times to allow them the opportunity to win my business back. And I'm telling you, they've been about double the price for auto insurance, renter's insurance. Long story short, I go with Geico Military. They're the bomb. They're the bomb. My life insurance is with Navy Mutual. And then, of course, Navy Federal is so much better of a company than USAA ever was. And their commercials piss me off anyway. So that's my spiel on USAA. So I'll be accepting the tomatoes that you're throwing at the computer screen right now for all you diehards. But I talk to people all the time at work who are like, yep, I'm with them all the way. And then I kind of explain it and they're like, wow, yeah, you're right. I've never really shopped it out. I'm like, shop it out, man. Good grief. You can save hundreds of dollars on your car insurance. That sounds like a Geico commercial. Anyway, that's my spiel on that. Hopefully you get some value out of that. Just roll out a 457 to Merrill. I have enough to qualify for free trades. Check your FAQs or contact customer service for rollout info. Definitely. What about the TSP? Do I use URS? I've got Reggie Mitchell in the group here. Please clarify that question. I would really like to understand what you're talking about in the TSP. What about TSP? Do I use URS? Oh, I'm trying to understand what you're talking about. If it's the life cycle funds or if it's to self-manage and choose the accounts on your own. I'm kind of on your thread right now, so if you come back to me, I'll get it. Should I build my own house? Yours means yours. Do you use yours? Do you use, what about TSP? Do you use yours? Gotcha. All right, cool. I do. I think TSP is absolutely awesome. I do. And I think every single product in the TSP is quite good. Okay, I've changed my tune on this a little bit. I changed my tune a little bit in that for the military folks, and I don't mean to get too crazy about military folks, but I love you, and it's Memorial Day weekend, and I'm going to take care of you. It's just that simple. Within the TSP, the life cycle funds, and they're going to be coming out with a new life cycle fund November of 2019. Okay, so in a couple months, they're going to be coming out with the new 2060. All right, 2060 is going to be an all stock portfolio, so it's going to be very heavily weighted in CS&I. Okay, a lot of people do that anyway. That's what I do. Okay, but if you didn't have any investing experience at all and you wanted your portfolio to be professionally managed, go with the life cycle. Okay, it's going to cost you 34 cents for every $1,000 invested. Comparatively speaking, the 401k is going to be around $4.50 of expense for every $1,000 expend. That's why I say 401ks are very, very expensive. So if you don't know anything about the market, just go into the tsp.gov website. You can check out TSP information on YouTube. It's very, very good. Okay. Now that it's cleaned up, I made a complaint about somebody who was claiming to be somebody who they were not, and they were attached to the tsp.gov through YouTube. I submitted a claim to get their ass removed from that because it was very misleading. But anyway, you can get really good information off of YouTube now on the TSP, but to choose whatever you want, whether it be the 2020, 2030, 2040, or 2050. And like I said, they're coming out with the 2060 life cycle. So I do use the TSP. I just put about a $10,000, $12,000 block into the G fund. I've had one of my very, very good community members. I don't know if he's watching tonight, but he got back to me and talked even about how good the G fund is actually. 3% going to outpace inflation. It's going to work for you. Tax protected, hopefully, if you were able to do the Roth TSP, because that's something I should clarify for you guys. I'm actually in the Roth TSP, which is just awesome. So if you have the ability to do any portion of your contributions to the Roth, please do so. Obviously, it's changed a little bit with your freedom and flexibility with the blended. So depending on if we are with the legacy or with the blended TSP, that's going to impact, what buckets you can actually contribute to. But they've really improved the TSP over time, and it hasn't been around that long. BlackRock manages it, so they do quite a good job. So hopefully that helps you guys on the TSP. So I'm going to cruise back up here and see if I can't cherry pick. It's funny, I go through these threads, and I typically see how many questions I actually miss because I get on a rant. But I really do enjoy it, man. I really do. Navy Fed has a better option, partial shares, etc. That's pretty good to know. I don't know about their brokerage side of the house. I just know as a bank, they're freaking awesome, and they're all over Virginia. All over Virginia here. They're pretty cool. I still have my Navy Federal Credit Union. I would keep that. So what's the best way to transfer funds out? You guys have already addressed that. That's easy. Transferring funds is very, very easy. You're going to sit on the phone. It's not going to be fun. Okay. It's not going to be like sitting on the beach drinking a beer, but it's just something that they're used to. They can walk you through that entire process. So Nationwide administers one of my employer's plans. Fidelity, the other, no issues with either. That's really good. So anytime Greg adds a thread to my group here, it's like the value just kind of jumps off the page, just always offering just really good value in his comment, man. I'm tickled pink, really, to be part of this community and generating conversation. Not to get all soft and muddy on you guys for sure, but I'm very thankful. I'm really, really thankful to be generating and building relationships with people who are interested in the topic, and hopefully you guys feel the same way. Certainly 23 of you guys do with the thumbs up that I've got over there. It's pretty awesome. So if you're sitting there enjoying, I get who was the somebody tipped $2, man. I exempt the $2 tipper. I exempt Martinez from giving a thumbs up, man, because Martinez tipped me $2, man. That's going to go toward my Yeti. Good stuff, man. I'm going to cruise up here. I hope you enjoy your stay. I don't know who's. I got Chris Jordan in the group here. He says, "Welcome to Virginia Beach, man." I don't know. I live here, so definitely not my home, but I'm making it my home, and it feels like it. I'm definitely liking this. It's pretty cool here. It's a nice area, really nice. I'm liking it. So if anybody wants to go into some real estate business with me, just hit me up. I'm all ears. All right. So I just had a web designer hit me up with a quote for the Independent Investor channel. I'm seriously considering it, but it's expensive. It's about $2,000 to start the website. And that website's really for you guys. It really is. It's will allow a moratorium of testimonials on there. Obviously offer some blogs for myself, but I'm not really sure if I'm at that point where I'm going to take that jump on the Independent Investor channel. Kind of mulling that over. But just had that done up this week for you guys. Well, let's cruise up here and see what we got here in the group. I've got AVA in the group. VEEV is my current health care play dealing with document digitalization. So something really interesting to check out there. I'm not familiar with it, but sounds interesting enough. That's just one slice to my risk one. Hold the FANG spider ETFs and diverse blue chips. My larger sector folders in my Roth is the M1 Ultra Aggressive. That was the portfolio I liked the best as well. Real estate and monthly dividends folder I made up, and materials. Good stuff. You guys are getting the idea here. Just put these good quality assets within either an M1 product or a Firstrade product to get you up to that first, respectable amount. And I'm not talking about 10 grand. I swear to God, anybody who joins my community, I can take you from 0 to 10 grand quick. Okay. You can do it. If you think you can't do it, drop those thoughts, man. You can do it. Especially if you're in your 20s and you don't think that you can do it, because if you're in your 20s, you probably think that 10 grand is just impossible to get to. I'm here to tell you that you can get there. But the first thing that you need to do to get there is actually start the account. Okay. And then start to mull around some of these ideas about entering into good quality dividend payers, maybe enter into some growth exposure the younger that you are, and also building that diversified base within those good self-directed accounts. Get that money liberated in there for you, even if it's a little bit. Okay. This invest $100. I mean, $500 is what I understand to be the minimum within M1 Finance for the Roth IRA, but I mean, that's very little, okay? And if you need to save up to that amount, if you've got a side job, whatever it may be, and you're serious about investing, get up to that first 500 and fund your first pie. Add your first 2 assets in there, just buy the VTI. That'll be your very first asset in there. And let that sucker grow. Let yourself be able to fund that account over time. It's really, really important. So Medtronic is up 5% this week for me. I didn't know Brett had a position in Medtronic. That's pretty cool. Really cool. I'm happy with the stock. I think that's going to be a really, really quick grower in healthcare. Probably my most aggressive name, quite frankly, in healthcare. So what are your thoughts on Intel? I'm happy. 44 to buy. I mean, you guys, again, who are tuning into me, I'll give you just a rundown of entry points right here, okay? Entry points, Wells Fargo, AT&T, okay? Intel, Google, NVIDIA, stocks that have really just taken an absolute bath. I've thought the entry point to Pfizer here over the last couple of weeks has been really, really attractive. Okay, Pfizer. I'm running through my catalog here for you and just kind of throw these out machine gun style. It's a lot more fun that way. Entry points. Comcast has run up a little bit heavier than I would like. Anybody that didn't take profits in Qualcomm, Probably not the smartest move. That really ran up hard. If I was owning the stock, I would have taken profits, no doubt about it. It's on a free fall back to the out of the stratosphere and back to Earth. So that's interesting to see. I think the entry to Apple computers could be okay right here. 5 shares, $900 for you guys that are starting positions, maybe a couple shares if it's part of an M1 pie. Add a couple percent to Apple to the pie. You guys have a lot of freedom and flexibility in M1 finance that a lot of others in the community don't have. That's why I kind of mention the M1 strategy, because you can just easily parlay a few percentage in Apple and buy it first thing next week. But I think Apple provides an interesting entry right here. CVS Pharmacy. I was having a discussion, I think, with Brent, I believe before the live stream. I think CVS is really attractive here. Holy smokes, man. Across the board. Solid dividend. I believe they merged with Aetna, right, guys? Valuation, ratings, very undervalued, very solid, very established. I could consider CVS in the healthcare sector as a cornerstone in your portfolio, right? So just giving you guys some ideas, man. Even if you're sitting there and you're like, okay, I've been with Ryan for 6 months. I started a passive base. That's all I have. Now I'm interested in kind of entering in maybe some single stock. I mean, think about what I've just offered from the healthcare sector, right? One of those offerings that, or one of those sectors that I like to see you have a little bit more exposure to. So Pfizer, CVS. We're not touching the stocks to own forever. I don't know if J&J is providing a good entry point here. Merck, I don't believe is at all. Merck has doubled since I've recommended. It's just been on fire. I've since sold Merck a long time ago. And then Medtronic is a little more growth than I'd like to see you guys get exposed to right away. But Pfizer at a 4% fat dividend, and I don't think CVS is that far behind. I think 3.25% dividend on CVS. That's good stuff, man. So I could make this an actual series where I say entry points. Might have some entry. This is just my opinion too, just for entertainment at all. Obviously do your own research, but I've got a bunch of others, man. I like Halliburton right here. Holy smokes, in the low 20s. I think Marathon Petroleum is providing a really good entry. Let's see, what other good entry points do we have in stocks? Cisco's come back off the high a little bit. Intel, I think, is a good one. Yeah, that was kind of fun. Some of the ideas that I'm looking at. Devon Energy, that's another good one for a good entry. Yeah, some stuff that's really come back. NVIDIA has really come in. NVIDIA is kind of in my top 5 conviction buy right here in the growth. If you can pick, I missed 2 really interesting ones. Alibaba might be close to number 1. And even with the China stuff going on, Alibaba is not worth ignoring, okay, as opposed to like looking at, okay? That's why we have this live stream, so we can strike up this dialogue. And if you guys noticed, Baidu as well has really fallen out of the sky. JD.com is kind of held in there a little bit. I currently don't own a position in JD, but I'm very, very up on the stock. It's very, very good. Those 3 right there are probably my favorite Chinese stocks, and I don't own any of them. I do still own a little bit in China Mobile, which has been just kind of a wet dog, to be honest, in the portfolio. It's been really disappointing. China Mobile, the other telecom names have been doing quite well. Verizon being one of them. Verizon's just been on fire, paying me a 5% dividend, getting me capital appreciation. So we're good with Verizon, but pretty cool discussion. I appreciate the comment. I've got Cholito USA in the group. Very cool, man. I think you reads utilities, oil, healthcare. If you pick specific stocks, there are some good deals in there. Geez, man, no doubt. So Brent's making a pretty astute comment. I agree with everything. Oil's going to be tough, man. It's really hard because it's one of my favorite sectors to invest in. It really is. I don't know why. I've just made a ton of money with oil, no doubt. You've got to have a little bit more of a cut above for risk tolerance. I'm not kidding. Oil will really take you there. It really will. We're coming into summer driving season. Gas at the pump has gone up across the U.S. I think with the heightened Iran situation, we've got a little bit of pinch on oil right now. So I don't really understand why WTI is going down the way that it is, and they're calling it to go back down to the mid 50s. What I've seen in oil is where people think oil's going, it doesn't go. So it's either going to go or it's not going to go. I don't think that it is. I really don't. But we'll see what happens. And then I do agree with the assessment that in REITs, I do recommend that you guys at least look. It's worth discussing. It's one of the 11 sectors. Real estate, VNQ. Okay, so you're going to get your listing off of Vanguard's VNQ listing. There's only 68 names, I believe, in the ETF. But if you jump onto the Vanguard's ETF website and go into VNQ, you're going to see what Brent's talking about with some of those real estate REITs within that ETF. And if you don't want to just buy the single stock, you can just go ahead and buy the entire real estate sector as a whole. You can do that by buying the VNQ Real Estate Sector Spider ETF. I own it myself. Okay, really good stuff. And utilities, oils, healthcare is good. Healthcare is kind of on a rebound. If you pick the specific, see, those are all some of my favorite. I did pick up 10 shares of Duke Energy this week. I did pick up 5 shares of Nextera. I did pick up 10 shares of Dominion. Okay, so I do own the Sector Spider ETF VNQ, okay, which is the utilities, and then I do own some single stock in utilities. Okay, Brent just offered a very meaty comment there, and it's there's a lot there. Okay, so I figured I'd take just a couple seconds and give you what I've got out of those, because I own a lot of stock and all those Sector Spider ETFs as well. So there is some good deals there. I totally agree with that. That's probably one of the comments of the night, to be honest with you, because there's just a lot of substance there in one sentence. So really good stuff. Trump wants a rate cut. He does, and Fed is saying that Trump has been planning 25% tariffs for a while, which is why he's been wanting a rate cut to stay in the green. Yeah, I don't know what's going to happen. We'll see. I'm very confused as to what this could potentially mean for the stock market. So we will see. Thank you for the info. VDs, Vanguard's Energy. The dividends are awesome. They are. It's about 3%. Agree with you. I am overweight in energy. Also have VYM. That's good. And VNQ. That is good. Making good dividends as well. So that's good. You have to understand too. I don't want to come across without knowing, the rest of the details on the portfolio. But I think you're fine. I think buying those Sector Spider ETFs and watching them go into a downturn, you're so insulated from those downturns. If you can stomach watching them go down a little bit, you'll be all right. You really will. You just got to have the patience to let them come back. I took VNQ into a huge downturn. Excuse me, VPU. I apologize. I keep getting VPU and VNQ mixed up in my head. I don't have this in front of me. See, I keep staring at you guys. All right. But VPU is the utilities, and I took that into some pretty deep water. Actually, it's come all the way back, and now it's outperforming. And that's the beauty of those Sector Spider ETFs. So. Reddit was the biggest drop in a week, and it was the biggest drop in a week in oil. It was pretty bad. It's too bad, when a sector does that. I've said I'm overweight in it, but we're fine. We're not doing anything. I doubled up my position in Marathon Petroleum, and we'll be fine doing so. We'll be fine. We're raking in some fat dividends while it's doing whatever it is it's going to do. That's the discipline of being an investor. It can be crazy sometimes. So I'm just kind of scanning through and making sure I didn't skip over some of these really, really good comments. Just got a heck of a thread here. Again, just take a small break and thank you guys for coming in to the group. I want to make sure some of the media messages that I've seen, since you guys aren't requesting my topics, I'll give them to you anyway. Some of the media messages, you can see a little bit more underlying emphasis on self-directed investing. If you pay attention, you'll see that Webull has come on. I don't know. I should probably put out a survey to the group. I told Scribner that I wasn't going to come out with Webull as an affiliate link on the Independent Investor channel. I don't know how you guys feel about that. If you said, yes, Ryan, offer it, I would do it. But I kind of do that out of loyalty. But I'm just not sure if folks are more happy with Webull as opposed to Firstrade. If I just offered them both, I would give folks really the pick of the 3 premium free investing app brokers out there, some of the cutting edge free brokers that I know of. Those are the only 3 that I even know about. But another discussion for another day. But Webull is actually popped up on some of the media commercials as well. So that's interesting, providing some awareness to self-directed investing. That's the first open solicitation that I've seen for that. So pretty interesting there. So anyway, I'm going to cruise up through some of the questions here if I can. Cruise on down to the bottom and see if I missed anybody. So we've been going for about an hour here, and just an awesome discussion. I really thank you guys for coming on. I've got Michael Hayes in the group here. Webull is my swing trade account. You can use those for swing trades, man. That's really, it's ironic. I don't use Firstrade for that. I actually use my larger Roth IRA through Merrill Edge for that, but I do have free trades through there. So it's kind of the same idea. I like to use those accounts that are tax protected. That way, if you take a profit after, a day, whatever it is, it's tax protected. So I really like to do that. And I don't do swing trading as much anymore. I have 3 taxable one joint brokerage and 2 additional taxable brokerage, both through M1 and Firstrade. Yeah, it's cool, man. It's really exciting, the environment that we have now, giving you guys the opportunity to trade in those accounts. I never had that when I started investing. You bought 4 mutual funds in a managed account, and that's just the way you invested. So, I mean, you could still outpace and you could still do some good things. So, really interesting stuff, man. Michael, yes, you are correct. I have Webull account, but I don't actively use it. It's 2 free stocks. Interesting. I'd like to know if you like it or not. I'm not really sure, and I don't know if you're offering some affiliates through your channel as well, Brent. I just don't know what to do. I don't want to overburden some. I've learned from my mistakes with, trying to offer betterment through the account. I still contend that there was a niche of genuine thought there, offering betterment, but it just wasn't very well received over the channel. So you guys know we pulled that, but definitely Webull could be one of those things that we could offer. Whether or not I do that or not will be up to discussion for sure. So can't go wrong with VNQ. Yeah, it's one of my faves for sure. It's really good, nice dividend payer, and it's one of those ETFs that really don't have a lot of holdings in there. And that's what's cool about it, is you own just a piece of 68 companies in that ETF. It's really a cool product. I mean, it's returned close to, if not over 10% year-over-year return, and it's been around for a while. You can't argue with those numbers. So really trying to, when I look at my portfolio, I want to make sure that year-over-year I have the opportunity to have a nice base of assets that have the very best chance of turning me back 7 to 10%. That's a huge strategic goal in my portfolio. It's probably a YouTube idea, to be honest with you, because the single stock stuff, I may or may not outpace the market. I'm not naive enough to know that the statistics are against me, okay? Even with the dividend reinvestment, etc., all that stuff. So that's what I'm talking about with the passive base. I want to make sure that passive base always has that ability to return you that good 6, 7, 8, 9, 10%, even north of that if we get good market conditions, and that you're taking advantage of those downturns to help you kind of average down a little bit in case we end up in kind of a retreating market a little bit. So, all right. Ryan VNQ is real estate, VPU is utilities. I know. I know you know, just tongue twisted. That's pretty cool. Yep. No, I know. I know. There's a lot of ticker symbols upstairs in the old noggin. So, but anyway, Baidu crushed me. 170, now 114. Wow. I sold it. I sold it. I don't know why. I don't know why I sold. I had Baidu and Alibaba at the same time. I might have had an overlap of JD.com. I sold them all. I sold them all. I just didn't want to carry China exposure into this. I don't think that's the reason why it went down. I don't know. It just got crushed, like you said. I don't know what happened. Just a very quality. The valuation on it has got to be very attractive. I would look at the PEG here, the price to earnings to growth. I think we're way below where I bought. I bought it at 130, and it ran up very quick into the 160s, and that's kind of where I parted ways with my Chinese search company, Baidu. But you want to talk about a pretty favorable entry here. I don't know if you had the ability to maybe enter some more, you could probably justify maybe put in another position, but just wait it out. You'll be fine. You'll be north of 200. No doubt. I can't believe the violent price movements in that company. It's a huge company, huge. So I would wait that out. Definitely don't sell here. Don't take a loss on it right here. You'd be all right, no doubt. Got Chris invests here. Any undervalued sectors right now? Sure. The undervalued sectors we've been talking about, certainly with energy. Healthcare's kind of starting to climb out of it. Financials have been undervalued for a long time. Too long, I might add. You could probably really interesting stock picking opportunity from financials as well. Undervalued, yeah, that's about it. Outperformers have been utilities, certainly. Growth has been really underperforming with your FANG names, Google, Apple, excuse me. Well, Apple has been underperforming Google, Facebook. Netflix is not a stock I'm interested in, but certainly NVIDIA as well. But cloud computing has been outperforming with your CRM Salesforce, your Adobe systems, some of those companies as well. So VFC spun off KTB, and M1 promptly sold it this morning. Interesting. I like the dividend in AT&T. That is absolutely correct. I as well. I've owned Apple for years, so it's pretty significant in my portfolio. Can't add any more. 3M as an entry point. Yeah, you got me there. Avi A is keeping me honest. Yeah, I'm about ready to double down on 3M. I only own 12 shares of the stock, but great company. This is what happens in stock investing. I could cry about it, which I don't do that anymore. I'm telling you, if I can provide this opportunity to you guys, I can tell you my entry point in 3M was not where it is right here. Okay, so if you're interested in buying one of the best, most diversified industrial companies out there, 3M will get it done for you. No doubt about it. You have I'll probably give you the green light to invest in 3M anytime you want to, especially right here. And somebody was talking about 150. Don't be too patient. Okay. These good companies typically don't give you a lot of time to sit there and think about it. That's why you got to be ready, and you got to kind of strike when you're ready to have an idea, maybe even set a limit price for yourself. That way, if it hits, it executes the buy for you and you're good to go. You own the stock. So I would set it at 155, just to be careful. Even 160 if you really are interested in taking a long position in 3M, because is it worth not catching it, long? If it does end up flirting with 160 but never hits your price, and then starts back north again. So who's to say? But yeah, 3M is definitely on that list of good entries. I'd wait a little. The market is killing Tesla now, but I believe electronic vehicles is the future. Most companies are creating their electric lines, emissions regulations, and depleting fossil fuels. I agree with all that statement. I just think what gets missed with Tesla sometimes is what they're doing behind the scenes. I think they've got just such a strategic head start on everybody else that's doing it. So not to be ignored. Okay, am I putting my money in it? No, I'm not. I'll continue to watch and monitor it, and it's kind of entertaining for me. I don't have any money in it, so it's entertaining for me. It's not painful. I have enough money in other companies that go down and pay me just as well for being an investor. That's fine. Then you're making your SEO driving traffic to your own site versus something you don't own. Yeah. Wix isn't a top domain. Making your own domain is cheap. Yeah, I have the name of the place if you're actually interested in it. Justpost.com. The justpost.com will allow you to do it free of charge. I did it through WordPress, GoDaddy, all that crap's a ripoff. All of it. It's all a ripoff. Don't even sweat it. Wix, all that stuff. I see commercials on the front of my YouTube videos. I wish I could strategically pick who I want to advertise on the front of my stuff, because I don't endorse those products. And I've just found out from some people who really know the business, I do not. Okay. It's just another layered entry program to where if you actually want something that's feasible through the company, you got to pay so much to get it. It's such a ripoff. It's not even funny. All right. But you're absolutely right about that. Brent, it's coming back on that. Yeah, see somebody saying use Wix. I just disagree. That's just it. I don't God, anymore. Anybody ever is out there, man, you just got to find somebody who knows how to build a website, and then they'll get you posted, and they'll get you on there, and get you your exposure. I think that dedicated the one city on only Doug Winter as a mod. Don't know if he's here. He's not. I haven't seen Doug this evening, man. If he catches it on the live stream, I'll give him his shout out, even though he's not here. So somebody says FAG. I'm not really sure what that means. If it's a Facebook, Amazon, and Google, probably, right? That's what you mean? Stealing bids? Cool. Cool, man. You can steal my bids. You can have them for free. I don't know if you can steal free content, but you can have them. What's with the unrelated comments? I'm not sure. Hey, are you able to give MOD to people to clear or remove people? Yeah, probably, but I don't really care. They can come in. They can do whatever they want. FAG. Oh, stealing bids. Yeah, I probably do. Here, I'll just remove. Let's see if I can remove this person. This would be fun. Actually, let's put them in a timeout. That'd be fun. There it is. Cool. Yeah, nice. Now you have to earn your way back into the Independent Investor Channel live stream, since I charge so much to come in here and listen to my information. That's funny. And if you're calling me that, I'm actually happily married. I've been so for 14 years. So go figure on that. Anyway, how's Firstrade going? While I try to find reviews on them, I see the app has 2 stars, and some people complaining about not being able to withdraw money. Have you withdrawn any money yet? I have not withdrawn money yet. I do not anticipate a problem. What a lot of people will complain about is they'll call them and they'll want their money right away. There's certain legal obligation that a brokerage will have to sweep the account free of any dividends, and the longer that you have stock holdings within that account, the more subject to dividend payment that account will be. So they have to keep that account open and sweep the account. But as far as getting money out of the account, I can't speak on that. I'm not going to buy into the fact that a broker that's been around for 30 years takes people's money and keeps it. I don't know. So when I do end up liquidating the Firstrade account, which I have no intention of doing, then I'll go ahead and chronicle that, and I'll show exactly how long it takes to liquidate the account. But a rollover, You got to kind of know where you want it to go, what you want, what to say. A lot of people, I've done videos on this. I had people hitting me up and they were like, Ryan, I'm scared of my broker. I don't know like what to say. I don't know. I don't know if I am able to do this. I'm like, are you freaking kidding me? That's your money. Go get it. Go get it. Utilize the platform until you're unhappy with it. Transfer it, roll it over, whatever you want to do. Like right now, I have an existing brokerage account. I just transfer it to the existing one that I have. So, I mean, that's just kind of what you do. So, um, but anyway, I kind of want to bring Stealing Vids back in and ask him what he wants. Yeah, well, let's do it. Let's see what we got. Put you in this high user from the chat. I don't know. I don't know. Anyway, that's too bad. Could have learned a few things, man. That's really too bad. So I know a thing or two about investing. You can learn a thing or two if you just open your mind and shut your trap a little bit. Anyway, anyone holding on to ARC funds, they're actively managed, and Kathy Woods has an auspicious and knowledgeable grasp of upcoming future foundational innovations. They do have a 0.65, which is significantly more than the robo investors. It's about double what the robo investors will charge you at a 1/4 point. I don't know much about those. I've heard of them. Again, hard to kind of advocate for a fee-based account when we know statistically those guys have problems duplicating that track record. Okay, so you got to be kind of careful with seeking your managed exposure. If that's what you want to do, so be it. It's just it's dangerous playing with fire a little bit. So thank you for your insight. You guys are talking within yourself about the TSP. Okay, good stuff. A few more. So you guys will be pleased to know that I have a video queued up, and it's talking about my flight to safety. So I've put a little bit more exposure into some bond ETFs. I mentioned that at the top of the program. But I talk about risk tolerance all the time on this program, and whether or not you guys are a moderate risk tolerance. Right now, with the condition of the stock market, I would seriously consider you guys looking at a notch lower on your risk tolerance. Take a look, if you're a moderate or a midline investor, take a look at what the portfolio will look like if you adjusted to a moderately conservative posture. I think that might be prudent. I'll tell you, I've done that personally with the market in its current condition, moving from more of an aggressive to an aggressive conservative. So give you an idea of some recommended allocations within the portfolio. So that video is going to chronicle some of the flight to safety moves that I've made through buying some of the ETFs, taking some of the growth out of the portfolio, taking profits in those names, and letting some of the other names actually work for myself. So we've been going about 1.5 hours, guys. Typically, I try to stretch it to 2 hours. I don't know if we're going to do that this evening. It's been an awful long week, and getting into this 3-day weekend, I'm going to look to enjoy myself as well. I'm going to cruise back down to the bottom and see if there's any more questions that have kind of popped into the group here. I do see my good friend from Long Beach who's just popped into the group. I don't know if she's been stuck in traffic or what, but I'll give her a hard time for just waltzing into the live stream like she owns the place. But I'm just kidding. I'm just kidding. It's good to see you. I haven't seen you for a while. I hope all is well. All is well with Lydia Santiago, who's one of the sponsored. She says, yes, I'm excited. No, I'd be excited about the awesome weather you're having. I will be at the beach this weekend, certainly, so having a good time. But it's great to see you. I don't know if there's anything specifically that I can dress for you. Let's see what you got. And so you're just talking within the group there. Lydia likes to come in and just say hi to everybody, which is awesome. Very cool. But if you got anything specific for me, I'm making some pretty interesting moves in the portfolio. with the with the current state of the stock market, it's confusing right now. It's kind of hard to know what to do. So we just got off work now. Wow, workaholic. Nice job. LA traffic is the worst. I know. I used to travel at night there when I needed to drive. No way I would drive. That 405 gets absolutely bananas. It's crazy. So that's my daily commute. Koreatown to San Pedro. Yes, that was my home for a while. It is Long Beach. Okay. Good stuff. I've got Gunblazer in the group. Not be a bad idea. Consumer staple should hold up. I do own that ETF as well. What moves in the portfolio? What moves, Rand? Well, I think a lot of the moves that are big and worth mentioning. I told you about the 20 share increase in Apple. I'm obviously long this stock. The increase in Marathon Petro, the two $10,000 blocks in the bonds. So this is in addition to the existing bond portfolio that I have that's quite significant. That's taken my bond exposure up a little bit. I don't know if my account is still open. It's not. It logs me off quick. Taking the bond exposure up a little bit as we potentially move a little bit closer to an inevitable recession coming up. But nothing too major. All the regular holdings are still there, nothing crazy. I typically don't like to move a lot of those cornerstone portfolios out of the portfolio, but what criteria do you have for taking profits when channeling? Yeah, when I'm up. That's my criteria. I've been asked this many, many times, Greg, and I wish it's not giving you a crazy off the cuff answer. But when I'm channeling a stock, it can really just depend on how, if it's in the portfolio, it's working good, and I'm up 6-7%, I may take that profit right away. So, and live to fight another day. There's just so many good names out there that you can invest in, take position in, and look to skim the stock over time. So there's no real hard and fast rules that I have. I typically try to hold my dividend payers a lot more heavy, and that's just my style. With growth, I typically look to take it up, a few percent, and then just go ahead and take the profit right off. It's skinning. And that's what I talk about when I'm talking about manufacturing money within the portfolio. That's what I do. And if I'm up a couple percent, I've taken profit with a couple percent, maybe a couple $100, and boom, I take it and I move on. I have no hesitation of doing that. The end game is money. So Matt Paley, tips are attractive if inflation comes back. That's really good stuff. Lydia says Roku is flying. That is absolutely true. She says, I'm excited for stocks to go down. I'm preparing for stocks to go down. I think it's inevitable. So I think if it's in the short term or the medium term, which I think it's going to fall more in the medium term, maybe latter 2019, maybe sooner, maybe. But 2020 might be interesting. All right. And we'll just have to see kind of what happens. But I'd like to see this market go down. I'm sitting on a lot of cash right now. I'm very, very, very prepared to take advantage of a downturn. I'm also in a position to continue the portfolio appreciating in value, getting paid that good dividend income like we try to do to win in either market. So listen, guys, I'm going to go ahead and sign off here for this live stream this Friday night. I just can't thank the community enough. I'll have to go back and review what that individual actually said who came into the group. Maybe they didn't mean any ill will. Maybe they just meant to ask me a nice, honest question about stock investing, but certainly not going to take time away from the good folks that make their way into the group that are deploying strategies that we talk about, looking to get a little bit more awareness to certain stocks, moves that folks are making. We've got a very, very special community in here. I don't want to see that compromised for the actions of one individual who just wants to come and troll the group. That's fine. No big deal at all. But anyway, Happy Memorial Day weekend to all of you guys. Thank you again to the channel creators that have made their way into the group here. And just wish you all the best. Have a great 3-day weekend, guys, and we will see you next Friday. And with that, I will sign off, guys. Thank you so much, and we will see you next week.